Okay, hey everybody, this is John. Welcome to the free video. Let's take a look at Netflix. That's where everybody's kind of talking about. Had this incredible move here, explosion, short covering, huge volume, and since then we've been in a downtrend. And so the question is, when do you buy the pullback? So you'll notice that when there is a firm that's distributing stock, it'll actually, you can do like a 233 tick chart. It will stay in almost a perfect channel, okay, and suck people in on the rallies, spit them out, chew them up, spit them out. Now, when we came down to the Fireline today, I did sell a put spread. That was the only thing that I wanted to do here, and you can see we've been essentially trading around that, a little bit of dip below, and we ended the day right at the top of this trend line here. So for me, for tomorrow, if it would be better on a bullish case scenario if we gapped lower, okay, kind of suck people out. But if we actually push back above this, we could get a very nice short covering rally. Otherwise, this thing's going to keep going lower and fill this gap, okay? That's just how this works. It's trying to ruin as many people's lives as possible for people that keep buying the dip without that change in trend, okay? All right, another one here. This is an unusual setup on LinkedIn. What I like here on LinkedIn is you got an interesting daily squeeze, but you've got a 39-minute squeeze setting up here. And what I'm looking for here is another little pop up to 221 and potentially 225. Now, so on this, it's just a matter of just kind of a hurry up and wait kind of a game. But it's so far, at least, very, very positive that the stock's not pulling back, okay? Anytime there's some selling, there are institutions buying it. They're not letting it break support. That is good. That's a bull flag. We've got a squeeze developing. It's creating pressure. So this is one I like, even if tomorrow, selling some put spreads on it that expire next week, buying some call verticals. But I'm not a huge play here. I'm looking for a move from 217.86 up to 221. Not a huge move, but if we're playing options, then there is plenty of room on that to make some cash. From the trade of the week, if you guys saw that, we had a nice little pop in CTXS today. So when you get something like this is why I kind of like to have a directional component to my trades in case something like that happens. Like, the squeeze, right? Bam, squeeze is telling us something's about to happen. So while initially we'd set this up and said, all right, let's sell these puts. That's great. At this point, those are worthless for the most part. Let's sell this put spread for $1. Great. They're worthless. But that's the most amount of money we can make on this trade. The good news is that if the stock is trading sideways, we're still going to make that money. But where we get paid is on the call debit spread. And in this case, we bought that 365, sold a little bit of premium out of the money to see if we could finance the trade, and that's where we're getting paid. And now, at this point, we want to see, are we at max profit or not on this trade? So we can look at this and see our risk, obviously, if this thing goes down, but our max profit is capped, and of course, at that sold call. So the most money I can make on this trade is $562, right? Like, there is no way I'm going to make a penny more than that. And right now, it's at $442. So it's essentially, 120 bucks away from max profit. We could give it a couple of days and let the premium portion of the $70 call, because that's, at $70.39, especially after a big pop like that. There's going to be a lot of premium juiced into that, but one day of sideways to slightly down, and that premium will erode, okay? We just want to be a little careful at this point. We don't want to be, there's no reason to be greedy, but at this point, if you took that trade, this is a good setup for these kind of trades. If you took that trade, you can start peeling it off. All right, last but not least, it's interesting. In the beginning of this year, we really were focusing on consistency, and that was a theme. And that's been kind of driving a lot of trade setups and things like that. And lately, I've gotten a lot more inquiries into like, hey, you know what? I like this consistency thing. I got it. How do you know when to do trades more specifically for growing your account? Yeah, it's nice to have a consistent equity curve, but when things come together, when do you take a little bit bigger position? When do you actually, or what kind of strategies do you employ so that you're not worried about it, and you're not going to have a huge risk to your account? And anyway, so that's the question I've been getting a lot, and I showed you a little bit of that today if you're in the trading room with a trade we set up on Baidu. But I'm going to do a free webinar June 16th at 8 o'clock East Coast time. That's Tuesday. Simpleroptions.com/grow my account. Going to be talking about the difference between trading for income and growth. Why, clear this so we can actually see this. And this is actually an interesting perspective here. And it says just why even attempt to double your account before it goes to zero in 12 months or less? Because the idea here is that the implication being that if you trade too big, you're just going to blow up. And I actually don't think that's the case in any way, shape, or form. And I'll tell you why. How to control risk while being an aggressive trader, what stops to use and when, and the mindset of an aggressive trader. So the goal with this is really just, and this is going to be kind of a transition that I'm going to be making in the summer, where it's been like, consistency, and that's great. I'm going to continue to focus on that. But I think towards the end of this year, we're going to see some situations where there's going to be some big trade setups. And when everything comes together, you get a little bit more aggressive, and sometimes a lot more aggressive, and you ride that horse home, okay? So anyway, that's what we're going to talk about, and looking forward to sharing it with you. You guys have a good one. We'll see you at the next update.